Method number two of modern philosophies of investing, two of seven, is what I call the FIRE method. Okay? Now, again, I've said in previous videos, these philosophies, the names of these are just me coming up with what I think is an appropriate way to describe it based on what I read out in the ether. Now, FIRE, if you guys aren't familiar with that, it stands for Financial Independence Retire Early. And it's become like this big, kind of a movement, I guess you would say, in the last 10, 15 years. Like, there was some like kind of fundamental bloggers that really kind of got this whole thing going, like Financial Samurai and Mr. Money Mustache, in the like 2009, 10, 11 kind of came up, and there were people that were talking about, wanting to retire early. A lot of what FIRE is be insanely good on saving, like save 70% of your income and invest it. And if you do that, you'll be able to retire early, maybe in your 40s. Some people try even in their 30s. It's a combination of both super savings and investing, and also living very frugally, so that you get more money saved early, and then later when you're retired you don't spend a lot of money, and the combination of those two things allows you to retire early. Now, since FIRE sort of kind of expanded out in the ether, there's other things like fat FIRE. So it's people who manage to retire early, but they're not necessarily frugal like that. I'm kind of in that category. I mean, I don't have tons of money and I don't spend tons of money, but I'm not frugal. I consider myself sort of like fattish FIRE, but I'm in sort of the FIRE thing. I kind of did the semi-retirement thing in my 40s, and I read a lot of the FIRE blogs, and it gave me some motivation and excitement. So basically, the gist of the FIRE investing strategy is that, it's very much the Warren Buffett sort of bogleheady approach, but no bonds, just invest in the S&P 500 or some kind of total market fund, like from Vanguard or something like that, and that's it. And all you do is dollar cost average every month into some kind of, broad market fund, whether that be the S&P 500, which again is like, the 500 top companies in America. Vanguard does an all market fund, which includes obviously what's in the S&P, what's in the Russell 2000, what's in the Dow, just every public company in America. You can do even like an all world fund, like, the vast majority of first world countries, and invest in like kind of like the global stock market as one ETF, one index fund ETF. But mostly I think it's kind of like all U.S. stocks and or S&P, and you just dollar cost average in, you buy, save as much as you can, just be like, live like, in one room on a mattress with no sheets, minimalism, own nothing, do nothing, only buy groceries. You have a beer budget where you can only drink one beer per month. People get really serious about it. And a lot of it sounds just like no fun to me, but, they get to where they want to go. A lot of the FIRE people, I think, were, people that worked in corporate America, like just, made good money, but didn't really like their jobs. It seems like there are a lot of software engineers, that kind of make up a lot of these people, or people in finance, whatever. And they just wanted to escape corporate drudgery like as soon as humanly possible. So however they can do that. Some of the FIRE-ish people also focus on real estate, I guess you say, but I think by and large you keep it simple, low cost index fund, probably from Vanguard. Vanguard's like, big deal, and you approach it that way. So that's number 2 of 7. And on the risk scale, generally would be considered sort of risky, depending who you ask. If you went to a financial manager, at like a regular brokerage house or firm or whatever, they're not going to do it that way. They're going to say, that's kind of high risk. I wouldn't do that. We need more exposure. We need more diversification. We at least need international stocks, and we probably want some sort of bond or fixed income component, or maybe even corporate bond component or something like that. So You know, there you go. That's kind of, you're going to be, as a fire person, you're generally doing it yourself anyway, you know, or you're having a robo advisor do it. They love the robo advisors. You go into your robo advisor Betterment, you put all stock fund, and you call it a day.